I think the first priority for the Chinese authorities is to reflate the domestic economy. You know, the domestic economy is the be-all and end-all. Exports are really, in a sense, just marginal on top of that. They're the icing on the cake. So I think that the concentration that they have at the moment will be on the domestic economy, as indeed we can see from the stimulus that they've been putting into the market, which I actually think has been quite substantial against market consensus.
So translation, Richard, do we, and just give us a line on valuations as well, how compelling do they remain? And if we do like the China narrative, notwithstanding the tariff risk, then is it A shares or H shares?
Well, I think you go for H shares first of all, because, you know, they're the most liquid, they're seen, I think, generally by the market. But I think what we're actually seeing in China is that the stimulus that went in is going to take some time to work its way through. Yes, we're seeing some recovery in Meituan, but what I'm hearing from in China is that people are still not very confident. They're still keeping themselves to themselves, not really moving out. The kind of stimulus that the authorities put in is very much of a trickle-down kind. So I think probably we're going to have to see 3 to 4 months before we really see any movement coming in. The one key thing I think we have to remember is that the direction of travel is certain now. The authorities are determined to stimulate the economy, and I think in general that's going to be positive for the Chinese economy, but we probably won't see it for 4 to 6 months.
Indeed, 4 to 6 months. So it sounds like there's still some wood to chop until we see full confidence, both the investor and consumer, returning to the China markets, Richard. So it's a very big call of yours to say that in 2025 we could see the China markets outperforming the US markets.
Well, 2025, of course, you know, is a long time. We've got another 12 months to go. But I think if we're looking at the kind of moves that we are at the moment with the stimulus in China, which is designed to make that economy start to move. And then we have the US, where I think there are lots of question marks. Yes, I know you've got a big graphic about how Wall Street thinks Trump is going to be good for the US economy. But for every tax cuts, there are going to be the bond vigilantes looking to deal with bonds. For immigrants not being allowed in, we're going to see an inflationary issue. Tariffs are an inflationary issue. And it may well be that, you know, come second quarter, that the market is actually going to see that many of these policies are not particularly friendly to the economy. As a result, we may see the market come off. And don't forget that the differential between the Chinese market performance and the US market performance over even 5 years has been extraordinary, something like 75%. So sooner or later, these things are going to come back into line. I think 2025 is the year.